All right, guys, we are back with another massive update as the Ethereum ETF has been approved. We've seen a $900 pump, 30% pump, and within $150 of a new fresh high. But the ETFs are still not released to the public, and this could take many weeks, if not many months. So what happens to the price over this period of time? Do we see a correction? Do we see a pump? Let's have a look at that in today's video, along with Bitcoin and the dump that we've seen over the last few days. Some of those support levels are coming into question. We've also got the strong alts, which are showing some signs of holding out here while the market corrects. And of course, those major meme coins, which have continued to pump. Now, on top of that, we've got heaps to get through with the traditional markets as harsh realities are setting in to investors as interest rates look to rise. Yes, you heard that here first in January, where we looked at interest rates and the possibility of them not getting cut. Pretty straightforward concept. I'll get to that later in today's video. So let's kick it off with covering the headline of SEC approving 8 Ethereum ETFs, including BlackRock, Fidelity, Grayscale, Bitwise, VanEck, ARK, Invesco, Galaxy, Franklin Templeton. They're all there, but it could take many months, taking 3+ months historically to get this out to the public. So in the best case scenario, a couple of weeks, but there's plenty of examples of this process taking 3+ months. So I want to understand what that would look like on the chart should we see a correction on ETH or higher prices. Essentially, we want to look at where those support and resistance levels lie for Ethereum. Now, this is the announcement from the SEC, so it's all above board here. It's all approved. It's not just speculative rumors on news headlines or on X or anything like that. So we've got this now, but it's not available for the public just yet. So onto Ethereum, and the move over the last few days has been $900 to the peak, nearly 30%, short of $150 from that previous top in March. Now, what I think is the most important areas for ETH over the coming weeks, as we saw with how this process could unfold within a couple of weeks, but there's plenty of examples of this process taking 3+ months. If we were to see price drop from here and just basically buy the rumor, sell the news type of an event, everyone getting hyped up that the ETH ETF is getting released. I got to get those letters correct. Then if this is the case, then we start to see a sell-off on price. Firstly, this is a good level, 34.50. That's the 50% level of the range down to the low on the 1st of May. However, going any lower than that is still not the end of the world, probably coming down to roughly 3,200 points. The reason being is that was previous support, resistance, resistance, resistance. So a nice fake out there, resistance, another resistance before the pump. So this seems to be the area that investors were accumulating ETH, putting in higher lows, sitting on 50% supports, and that seems to be a stronghold for the price. So if you were to see this fall underneath into this time frame here, going forward 3 weeks, and then into 3 months from today's date, how long it takes until it's released to the market, and then everyone can start to gamble on their ETH ETFs. 3 months would take us out to August of 2024. So let's extend this box out here. Essentially, this would be the no-go zone. It's not the end of the world because you still got the 50% there, but it's probably going to be a little weaker on the rally. What we do want to see, or at least people who are already holding Ethereum, or if you want to get into ETH, is for 3,200 to become the next level of support at a higher low. So that's the key levels here for ETH over the coming 3 weeks to 3 months. So the other thing we can see with ETH is the ETH versus BTC chart. Now this move up from the last few days, 20th there to the top, is slightly less than the pump we saw in January when the hype was there for the Bitcoin ETF. So at the moment, for the same week move, or weekly move, it's weaker than it was before. And this is on Ethereum's ETF. So this doesn't give me a lot of hope at the moment, just looking at this purely on the chart, because it's a smaller move than what happened back when Bitcoin's ETF hype was all the rage, right? So from here, the bulls really need to see this thing push higher and get back above those tops. So that's the resistance level there at 0.06, so 6 million Satoshis. Onto the social risk, and Ben Cowan's got his lovely social risk metric here. So I like to look at this stuff to give us an idea of the numbers of people in the game. And essentially this is, if I move this here, it's pretty much showing that we're at the lowest levels that we've seen in a very, very, very long time. What I think is most people are waiting for higher prices again to come back in. So when this occurs, it's a pretty good sign that you're at some sort of low. You can see it here in January, lows there, more lows. Of course, COVID happened, higher low bottom form, which is another very bullish sign. So that's a good thing there. And then more lows before the market basically took off from that point. So the beauty about that is it's probably sitting somewhere around a low. Prices are getting higher. So you're starting to see a divergence between the price and the retail, which means I think over the coming months, we'll likely see higher prices. To the altcoins, and after this pump from ETH and BTC, where does it leave us with alts and the strong alts? Solana is still tracking around the 50% level. Ideally, this is still a strong position for Solana to be in at this stage of the cycle. Higher lows have formed. Sol versus BTC, remember, I'll have a look at the USD chart as well for those folks. But anyway, this was the higher low area that I've been following now since April. I posted about it, so make sure you follow on X as well so you can get those updates. And essentially, it was just looking at altcoins, the strong altcoins, making higher lows against Bitcoin at that point in April. Note that Bitcoin went lower on the 1st of May. So Bitcoin put in a lower low while altcoins made a higher low against BTC. So there's some strength there, which might suggest that we're going to go into an altcoin, that there potentially will be an altcoin season if you're seeing higher lows on alts at this stage of the cycle of Bitcoin getting that slightly lower low. I'm not going to get too excited just yet because we haven't seen anything break out, but that's a good early sign should those lows remain in. So that's why I'm still quite bullish on this next stage of the cycle, or one reason. So above these 50% levels, still a good sign. That's this line here. You can see it for yourself on the chart, still in a strong position. If it starts to break down and fall below these levels, that would just mean that, well, it could potentially be forming into a weaker cryptocurrency. It's as simple as that. That's how I like to make my trading. I hope you've got something as simple as that in your own portfolio so you can make quick decisions when you're implementing your own trading. If shit takes a long time for you and you got to go and check 5 different channels, 10 different X accounts, you're still unsure when to buy and when to sell, that is going to be very, very painful when the market is in super drive, in hyperdrive like it was in December, November of last year, and then into that peak in March as well. It's so hard to make decisions if you need to go and check 20 million different things. Keep it really, really simple and life becomes far more simple. The harsh realities for the traditional markets, moving quickly on from the altcoins, is that interest rates may increase and not get cut. We're seeing it again. It's starting to shift into this increase into the next meeting. Now, of course, it's 99% chance that it remains at 5.5%. But at the beginning of the year, we did not even see any possibilities of interest rates increasing. Have been following the seasonality of the year. And we can see through May, April through to June, that there are periods where you do get corrections. We have seen relatively strong push out of April into this new top in May, but it doesn't seem like the market is doing anything too different to what it's done in previous election years. For your support, guys. I'll see you back at the next video. So until then, take care and peace out.